Usually when a company's assets go up, they're pretty happy about that. After all, who wouldn't want to have their properties valued at a higher level? Surely they could sell them for far, far more. Well, that's true if you can sell the property. In the case of the Walt Disney World Resort, of course, it's not for sale, nor does Disney anticipate it ever being so. And that's why, since it will never be sold, as Epcot's value goes up, Disney's temperature goes up, up, up. Dang it, Bob, it's hot! Disney's not happy that Epcot is now worth $5 billion, and they're telling the assessor just that. Hello, folks. Welcome back to the WDW Pro channel, where we talk about Disney parks in a way you are unlikely to hear just about anywhere else. And that's because we just tell the truth about it. We're not pixie dusters here. We don't believe in the heavy dosage pixie dusting. We don't believe in worshiping at the feet of the mouse. Instead, we just call balls and strikes as best we can. We tell you when it's good, we tell you when it's bad. And in this case, we're telling you something you might not find anywhere else, and that's that Disney is rather sad. No, mad. Mad, we say. And they are mad because their taxes have been assessed, their property has been valued, and Epcot is worth $5 billion. We'll tell you why that's bad for Disney right now. Andrew is the leading man on this. There's no better source to go to, and so we turn over to Legal Mindset to explain the situation for all of you out there. But folks, we highly recommend that you go to Legal Mindset, subscribe to his content so that you can watch the full-blown videos, because although we're going to spend 15, 20 minutes on this, who knows, maybe an hour, I don't know, but however long we spend on it, it can be nothing compared to what he's been doing and the depth to which he has gone. But Andrew, walk us through this new valuation of Epcot, who's doing it, and why Disney is so mad.
So, guys, I know this is shocking for you, especially in context of Disney, but property is worth money. So generally, generally, I know, your communist overlords don't want you to know this, but generally, free citizens own title to land, free and clear, fee simple title to land in exchange for money. And how do they determine what that land is worth? Well, there are several ways to value property. In fact, there's three key ways to value property, which I taught in my property law course, but I won't go there right now. I'll give you a quick summary.
Dr. Legal Mindset.
Three main approaches. One, based on comparables. You can use comparables. So, for example, a similar piece of property, how much that's sold for, how much that's on the market for, what's going on with the cost of a comparable property. Number two, the cost to replace it. So to build it over again, minus any depreciation. If it's an older building, how much does that cost? Is it economically viable? Is it economically feasible? Is it something that's become a little bit obsolete? Is there any obsolescence? That's number two for the cost method. Number three is the income method, which is how much money does it make. Now, back in the day, the Orange County Property Appraiser, which is the entity which looks after 7 different theme parks. There's probably more than 7, but at least 7 different theme parks, over 100,000 hotel rooms, tons of timeshares. So they do a lot. Now, they used to be greedy little government trolls, we'll call them that, government goblins. And they used to use, back in the day, a method that was called the Rushmore evaluation method. And this is back in the days when Rick Singh was the property appraiser of Orange County. They were sued by everybody for this, including Universal. And this was actually during the time at which I might have been representing Universal, because this method not only took into account the value of the property, which is permissible per all three methods, whether it's the income method, the cost method, or the comp method, you can evaluate them legally under Florida law under one of those methods, but they also threw in the value of your IP. So they would add the value of your IP to the value of the property tax you on it. And then tax you on it because you had a successful brand. So for example,
should have kept Maelstrom.
So Jonas J. Campbell's Love Shack Motel is worth a little bit less than a JW Marriott. I know you're sad, Jonas.
Yeah.
I know you're sad. Your brand is not out there yet.
But he has the heart-shaped bed.
Is it a waterbed, though? Is it a waterbed?
Is it
Is there a mirror above it?
Down butt-shaped bed.
Yeah. So that being said,
There's got to be a mirror up there.
Only a mirror, and only for pro. So that being said, this was a battle that happened years ago, and it was a just battle. I am not pro-taxation. I'm not pro-government grabbing for more than they should. I'm absolutely against it. However, they won this battle. Disney won this fight. Universal won this fight. The large hotels won this fight in a very famous case, which got rid of the Rushmore method. Now, all of the other major hotel brands and Universal stopped suing the property appraiser. But there's one entity that said, wait a second, we have a narrative. The property appraiser is charging us too much. Why don't we do what we do best and just sue people every single year? And that's what Disney has done. The magical corporation every single year has sued the Orange County property appraiser. The people they say they love and they help so much spend hundreds of thousands of dollars in legal expenses. And by the way, during these cases, they usually end up the other side, the property appraiser, that is the people of Orange County, usually end up footing the bill for Disney's legal expenses. Fancy that. So here you have a situation in which they are every single year challenging their fair due, and this year is no exception, as the property in Disney has been valued at $5 billion. Now, that's not the amount they were taxed on. They're actually, what the property appraiser does is it comes up with a valuation, what's called a just valuation or a market value, and they assess under the market value. But they've said the amount they were actually assessed on in taxes is still too high. So they're challenging that in court against Orange County. And one of the highest valuations is, of course, our magical golf ball in the sky, Epcot.
There you go. Spaceship Earth rising once more. An engineering and tax-generating marvel. Andrew, what recourse does Disney have? What do they have any real shot at getting this thing dropped?
So what they would do here is, and of course they've already paid their taxes, which is smart, because if they refuse to pay their taxes, they would have a tax lien placed on Epcot, and Epcot would be perhaps foreclosed upon if they didn't pay said taxes in a certain period of time. They're not going to do that. That might violate a couple of their bonds. They're on the
and they owe
side.
Interest if they had to pay it later.
Just a little bit.
Correct, 18% interest on tax liens in Florida.
And they
very
don't have
profitable
any money.
business.
They don't have any money.
So they go ahead, and what they do is they pay the taxes up front, but they challenge it. So they're going to try to get the money back. So they've already paid the assessed amount, and they're trying to get the money back. They're claiming it's too much. The increase was 25%, as a general, was 25% from the last year. But that's pretty consistent with what it's been the last few years. Generally, and property prices have shot up in Central Florida, so that is
wait, hold up there.
The value of Epcot's gone up because they put those great lights in the floor. You know,
now, wait a minute,
ones you
Andrew,
can't pressure wash.
You're telling me, don't wash those suckers.
Yeah, I can't believe that.
You're telling me that Florida property has gone up. Wait a minute. I thought that Florida was a deplorable hellhole that no one would ever want to go to, where they were killing off the masses by not following what the rules were. I thought Florida was a terrible place. Why is the property up?
Yeah, it's weird. It's weird that so many people want to move to Florida from states like New York and California, and it's just really Illinois. It's so weird. I don't know why they might want to move there, especially over the last 3 years. It's really weird.
And by the way,
now in my apartment in Miami now goes for twice the rent.
And by the way, if you want to leave Florida, decide after you've been there a while you made a mistake, they're not taxing you on leaving the way California would like to.
I'm in upside down world, guys. I thought Disney said that it was too dang hot. Bob said it was too dang hot. Now I'm finding out that more people want to be there 12 months out of the year. And you're telling me, based on what I've been reading, that tourism broke records this year. None of this makes sense. Topsy-turvy, I tell you.
It is very hot there, to be fair.
I'm gonna need 2 showers to handle this one. I'm gonna need 2 showers on
and
this
a hippo.
I need three.
Meanwhile, I'll be covering the Mecum car auction, the largest car auction in the world in Kissimmee, Florida. And at least we'll have member exclusive content coming in the next few days, but probably a video proper. So I think that Epcot is just one piece of Florida becoming much more valuable. Andrew, before we leave this topic, though, what about the Magic Kingdom? Because that's the most visited theme park in the world, at least it was. We'll see how it fares against Epic Universe. But where are we at there?
The Magic Kingdom is part of this. The thing with Magic Kingdom as well as Hollywood Studios is they're less clear because if you look at the Orange County Properties Appraiser site, as I did for years of my life, where I was perhaps paid a generous penny to do that, there's several parcels.
You don't know what you're talking about. You're a noob. You make this up. You play it. You play an attorney.
I'm making this up. I'm totally a fake attorney. All right.
Source, trust me, bro.
Epcot is
Show me your badge.
Epcot's one parcel. You can click on it on the Orange County Property Appraiser site. There's actually a good GIS map. You can pull it up. You can look it up. You can see the Mickey ear stuff, the parking lot, all that good stuff. You can click on the parcel. It's one parcel. That's not the same thing. It's not true for Magic Kingdom. There's a bunch of parcels that make up Magic Kingdom, but those together also have taxes which have increased on them as well. So,
well, that's what I was curious about. Is Disney infuriated about Magic Kingdom in particular? Hollywood Studios, I think, is physically so small that it seldom makes the headlines there.
And by the way, the entity that places these taxes on the bills is CFTOD. So the CFTOD is actually added to those as well. So that's yet another lawsuit between Disney and the CFT on the books.
They have friends in high places. So, and folks, put a bow on Spaceship Earth. We're done here. We're hopping off. We're moving on. Next attraction, please. But before we all go, would you do us a favor? Consider clicking the like button, share, subscribe. And when you click it, you stick it to the algorithms. It's the notification bell. Drop a comment down below. Let us know your thoughts. And as always, as we say every time here, keep learning, keep growing, and keep having fun.